네, 안녕하세요. 저는 삼성자산운용 김재윤 매니저입니다. 오늘 스튜디오에는 저희 삼성자산운용 홍콩법인 인도시장 매니저인 앨런 리처드슨을 모셨습니다. 오늘 저희는 인도시장과 상품에 대해서 얘기를 나눠보도록 하겠습니다. 안녕하세요.
안녕하세요.
Welcome to our studio. It is our pleasure to invite you to Korea and to our studio as well. I've heard that you have been managing Asia funds, including India funds, for quite some time now. Before I spill too much beans, would you briefly introduce yourself to the audience?
Hello and greetings to the listeners of the Samsung Asset Management YouTube channel. My name is Alan Richardson and I am a portfolio manager at Samsung Asset Management in Hong Kong. I have been advising on active equity funds from the overseas offices of Samsung Asset Management since 2008 and have been based in the Hong Kong office since 2013. I advise on Asian equity funds, including the Samsung India, Samsung ASEAN, and Samsung Asia regional funds.
Thank you, Alan, again for joining us today. Well, I cannot wait to gain some more insights from our conversation today. Well, before we continue on and without any further ado, let's dive straight into our main topic of today, which is India. India's stock market has risen again this year with excellent performances. And we really are wondering what is truly going on in India right now. What are some of the reasons of such recent surges in stock market in India?
India has, as a stock market, has achieved excellent stock market performance because it is a growth leader. India is the fastest growing economy not only in Asia but in the world, with a sustainable economic growth of 6 to 7%. Indian corporates have achieved double-digit earnings growth supported by the multiplier effect of robust economic growth, positive wealth effects, and stable political and financial systems.
I mean, you have pointed out the structural uptrend of Indian market, which I really want to touch a little bit more about. Then would you walk us through some of the background and history of the structural uptrend in the India stock market?
India is one of the few stock markets in Asia which has historically shown a structural market uptrend, whereas many other stock markets in Asia require market timing because they tend to be volatile within a horizontal trading range. India, on the other hand, is more like a compounding stock market with higher lows and higher highs. The compounding nature of the Indian stock market makes it suitable for buy and hold investing. The market structural uptrend is made possible by consistent double-digit earnings growth. Fast growth is achieved by economic development from a low-income emerging economy to a middle-income emerging economy. We are now in a sweet spot of India's economic development where a continuation of the fast growth is expected to sustain the market structural uptrend.
You've mentioned about the compounding nature of the Indian market. And would you be able to compare that with other markets in Asia and how that it would be comparable to other markets such as China maybe or per se Korea?
In the case of India, because the growth is being driven more by domestic factors and government infrastructure development plans as well as consumption stimulus, India's growth is less exposed to external factors. Whereas in the case of, say, Korea, and to a lesser extent in the case of China, export-driven growth is also a determinant of the performance of those stock markets. So I would say the advantage of India is that it's more of a domestic-driven story based on the development of a country from a low level of economic development to a higher level of GDP per capita. So a continuation of the last 10 years under Modi is expected to lead to further consumption stimulus and infrastructure development.
And one topic that you mentioned, which was quite interesting, was Modi and his regime and Modinomics, which is one of the most interesting topics when it comes to India. Then would you please explain why India's political situation is important and how it will influence the economy from this point on?
So Prime Minister Modi has just been re-elected for a third 5-year term. So now we're in a stage of Modi 3.0, where established since 2014 for another 5 years through to 2029. A stable government that is pro-growth and stock market friendly is particularly important for a country like India because it is growing from a low-income emerging economy to a middle-income emerging economy. Employment, consumption, and investment growth are expected to be the government's focus over the next 5 years. The investment themes include consumption premiumization, infrastructure development, and China Plus One manufacturing expansion. Korean companies like Hyundai Motors and LG Electronics are considering listing their Indian operations in India, which reflects optimism on the consumption outlook as well as the investment potential of India. Ultimately, India has the potential to achieve the same consumption and investment upcycles similarly experienced by the Asian economic tigers of the 1980s as well as China in the 2000s.
So if you mentioned about some of the Korean companies listing their stocks on the India market, which includes Hyundai Motors' new IPO, would you explain to us about some of the incentive of Hyundai Motors of listing their stock on India stock market, and what are the sentiments from Indian investors of this new IPO?
I think the reason why Hyundai Motor is looking to list in India is because there's several avenues of growth for them to consider. They can consider the domestic market penetration because auto penetration in India is only in the single digits. So there's naturally organic growth, the opportunity to grow with the market and increase penetration. And Hyundai Motors is already in the top 5 producers in India already. So the brand is already well recognized in India. Hyundai Motor has the capacity to further strengthen its position and to continue to grow fast in the double digits in India. The second angle that they can also be considering is also exports manufacturing, given that India would be a low-cost manufacturing center. So the actual production plant of Hyundai Motor in India is actually in Chennai, which is strategically located towards the ocean for it to export in the future. So those two angles, the domestic angle as well as the exports angle, provides a long-term growth opportunity for Indian operations. Another factor would be that because demand for growth opportunities in India is high, Hyundai Motors is likely to be able to achieve valuations for the stock above 20 times earnings, which is several times higher than the mother company itself. So high valuation opportunity, high demand for the IPO, and also potential growth capital in both domestic markets as well as exports manufacturing will likely make this IPO successful.
So stemming from Hyundai Motors IPO, I want to find some reference points in the past of other global multinational companies listing their company in India market. Are there any such cases, and how successful were they post IPO?
I mean, the good thing about Indian stocks is that there are many instances of multinational companies having success in listing their overseas operations in India to get the Indian growth opportunities. So some examples would be Maruti Suzuki. So the Suzuki brand has done very well in India and is a well-held stock among institutional investors. And then Hindustan Lever, which is related to the Unilever brand, has done well in the consumer sector. Even Nestle India has done very well. And then even among the industrial sector, you have companies like Hitachi, Siemens, which have also been performing well. So generally, the experience of overseas companies listing in India has been a positive experience. And given that previous track record, I would expect that Hyundai Motors should also have a similarly positive experience from their listing of operations in India as well.
So you've been following India stock market for quite some time now, and I do make some comparison with other stock markets in Asia, including China and Korea. What do you think is the cause of major foreign inflows from other broader markets? And is it because of the transparency? Is it more transparent for India stock market compared to the stock markets of China and Korea?
Firstly, and most importantly, is that investors overseas are attracted to India because of its growth potential. So they see that how other economies in emerging markets have developed into middle income emerging markets. India is still early in that stage of development. So they can see from previous experiences in other Asian countries like China and Korea that there's a lot of potential still of growth for them to achieve a more mature stage in their cycle. The other issue which helps for foreign investors is that because India is more like an English-speaking country, so reporting standards are naturally in English, so there isn't any communication problems for overseas investors. The standard generally is when I, for example, meet companies or I meet sell-side people, the normal medium of communication is in English anyway, so there isn't any communication problems. And then the other issue would be that India, the corporates themselves follow international standards anyway with regard to reporting. So quarterly earnings results will come from the companies, and then they will give updates on the operations, and then they will go to conferences to meet investors. So naturally, there's quite a high level of transparency in the communication from Indian corporates to the investor community.
So you've mentioned about China Plus One manufacturing plan of India. Would you be elaborate more on that plan by the Modi in India?
I think one of the objectives of the next 5 years under the renewed term of Modi would be to attract more FDI into India. And I think now is a better opportunity for India to be attractive for foreign companies because of the decision to increase diversification outside of China to other major economies in Asia. So I think this is a particularly good time in the cycle for India to be more proactive in attracting alternative investments in Asia apart from China, of which India would be a natural market to attract new investors from outside. So the expectation is that Modi will be near the end of his term in government. So this will be this final term that he's planning to do, given his age considerations. So I think, given that this will be probably is most likely to be his last 5-year term, is that there will be increased urgency to achieve the objectives and the foundations which were laid over the last 10 years. So the expectation will be a further increase in the pace of development in terms of attracting FDI and multinational companies to invest in the potential of India as a manufacturing place as well as to source the domestic economy. Yeah.
So recently, Chinese stock market has reached its tipping point and now has been declining ever since. And the investors are concerned about whether they have met a middle income trap.
Right.
Should the investors be worried about India's stock market of such trap, or should the investors be confident on the growth of the Indian stock market?
Yeah, I mean, I would say that emerging markets typically, when they do get to a certain level of GDP per capita, the challenge of sustaining fast growth becomes increasingly difficult. Fortunately, in the case of India, it's still at such a low base of 3,000 GDP per capita that I think it will still be able to double, if not triple, before you start facing a middle income dilemma. So anything starting to approach $10,000 GDP per cap, historically in Asia has tended to be where it gets more of a challenge to sustain the fast growth. So at this current stage, India still has a lot of room to grow before it faces the next challenge of developing from a middle income to an advanced emerging market. So I'm still quite comfortable, at least over the next cycle, definitely over the next Modi cycle at least. So from now until 2029, that we're still at that fast growth of development where it's going from low income to middle income. So that after that, then it will probably be more challenging. So next 5 years, I'm still quite comfortable with the growth outlook for India.
So I'm sure you have met with locals and have some conversation with them. What do you think define the nationals in India? Are there any specific characteristics, traits, or maybe something that stood out that made you more confident in investing into India's stock market?
Yeah, what I've noticed in India among the locals is the increasing confidence they have in the outlook for their own country. So their belief that India has more potential to be a bigger and more important country on the world stage. So the feeling of nationalism and pride in being India has, what I've observed, strengthened over the last 5 years. So because of that, Indians, the investors themselves are more confident in their stock market than foreign investors, because foreign investors might look at India and see that the market looks expensive because the valuations are expensive relative to the region. But the locals are still buying stocks because they have belief that the Indian growth opportunity would mean that the valuations in 5-year time is not as expensive as it looks right now because of the compounding effect of the stock market. So one important observation is that the locals have confidence in the outlook for their own country.
So now that we've talked a lot about the economics of India, we now would like to dive deeper maybe into sectors and individual stocks in India as well. So the question here is, out of multiple sectors in the India market, which sectors would be of your preference and why have you picked them?
So the fund is overweight sectors which benefit from consumption and investment growth. So the 3 areas in particular where the fund is overweight in the sectors would be industrials, property, and consumer discretionary. For the industrial sector, machinery and engineering and construction stocks should benefit from infrastructure development, especially in transportation related like railways and highways, as well as power generation and transmission. The second sector for overweighting will be property, where the wealth effect from capital market gains, urbanization, and lower inflation and interest rates eventually should lead to faster property sales and higher property prices. And thirdly, for the consumer discretionary sector, the theme of product premiumization under higher consumer purchasing power is expected to lead to higher product prices and profitability for the companies.
You've mentioned 3 different sectors in India, which is quite interesting from my perspective because it wasn't mentioned about ITs. Because in global market currently, IT, semiconductors, and all these technology-related companies have seen many surge in prices. Are there any AI-related sectors or AI-related companies in India that would be of interest or that could be beneficiaries of such AI-driven growth in the global market?
So within the technology sector, the key stocks right now are not in the AI manufacturing supply chain. The main technology stocks in India are related to services sector, which is IT outsourcing of like banking, financial and insurance services. So those stocks are not positioned to benefit from the AI manufacturing theme. Where there is opportunity in technology supply chain would actually be a diversion of EMS, electronic manufacturing services, from China to India. So for example, Apple would be asking companies to potentially find new partners in India to do the casing or the screens for their phones. So it would be more related to development of existing technology products, rather consumer electronics related products, rather than in AI technology at this stage in the cycle. So I think India would still, the main selling point for India as a manufacturing base would be in the production of like more mature kind of electronic products, which it hasn't tapped yet.
Then do you see any potential of India market developing into AI technologies or AI manufacturing or AI related?
So in EMS, yeah, I mean in EMS development, I would say that I'm increasingly seeing companies which are finding new opportunities to grow their revenue base based on electronic manufacturing services. AI technology would probably take another few more years to see that growth angle to come in. Not at this stage in the cycle, I would say, yeah.
So there are a lot of Indian CEOs in the American multinational companies currently. And if those type of CEOs gets developed in India, looking at a very long period of time, then would that give another positive outlook for India's market in general?
Yes, I mean, you can see that the history of some of the Indian nationals in overseas companies in US, they have a successful track record of developing high growth businesses. So I would say that India still has an untapped human resources potential, which as the country further develops and education standards continue to improve, that there's still a lot of human resources which can add to the productivity of India's growth. And so I would say human capital, in addition to investment capital, can provide even further additions to the growth potential of India.
Well, we now hope to wrap things up. And for the audiences who have followed us through the conversation today, will surely be interested in gaining more exposure to the growing India market. Samsung Asset Management Codex also has Codex India Nifty 50 ETF, which invests in top 50 India blue chip companies. Would you introduce other India fund products that are available from Samsung Asset Management?
Samsung Asset Management also provides two active equity funds. They would include the Samsung India and the Samsung India SMID product, which is a small and medium cap fund. The Samsung India fund is more a large cap fund, which is benchmarked to the Nifty index, which comprises India's largest 50 stocks by market cap. So the Samsung India fund would provide more stable and balanced returns to the broad economy. Whereas the Samsung SMID, the small and mid-cap fund, is more related to the smaller stocks, and it's benchmarked to the BSE mid and small cap index, which comprises the smallest Indian stocks, the 30% smallest Indian stocks by market cap. And that would total in the index about 1,126 stocks. So this fund will provide potentially higher returns, but also more volatile returns to the economic development of India.
So I'm afraid the time has run out for questions, and we now have to say goodbye to the audiences who are watching us so far. 네, 지금까지 알란 리처슨 PM과 함께 인도 시장을 알아보는 시간을 가졌습니다. 지금까지 시청해주신 삼성자산운용 구독자분들 감사합니다.
감사합니다.